So today we're going to be talking about what is a Forex trader's salary and how much a trader can make. Let's go. All right. So today we are going to take a look at what is a Forex trader's salary? What is it that a trader can make? How much can a trader make? Now, to answer this question, there's no one size fits all answer. The answer is vastly dependent on a few variables, and the variables are as follows: the size of your account, the size of your risk per trade, and your ability to hold a trade for as long as you can. So I'll give you a little insight into this, right? So a trader that has more money, theoretically, in their account, theoretically, has the ability to make more money, right? Whereas a trader with less money, theoretically, has the ability to make less money, right? Now that changes dependent on the next variable, which is the risk percentage, right? So a trader, let's just say a trader is taking a trade and they're risking 1% of $1,000, which is $10, right? Because 10% would be $100, 1% would be $10, right? The trader is risking $10 and they take a trade that goes 2% in their favor, which means the trade goes $20 in their favor. That's 2% return. Now, conversely, another trader, trader B, has a $100 account and he's risking 50% of his account, which is extremely dangerous, by the way. But he's risking 50% of his account, or $50. So if he loses the trade, he's going to lose $50. But his trade goes 2% in his favor. Well, not 2%, sorry. It goes 2 times his risk, right? Meaning, instead of he's risking 50%, but it goes 2 times his risk, which means it goes 100% in his favor, right? It means that he makes $100 on that same trade, right? Now, obviously, you could tell that the trader B, he makes $100, while trader A, even though he has more money, makes $20. Trader A is actually a safer trader because they're risking significantly less to make a much safer return, while trader B is much more risky. Now, there are traders out here who can do either, right? There are traders out here. Some traders will trade like trader A, some traders will trade like trader B, right? What I want you to remember is, in order to make money in this game, it's not about what you can do now, it is what you can do long term consistently. And trader A is the one you want to be like, not trader B. Trader B is not a trader. They are actually more of a gambler, because what it's saying is you basically have no choice but to win every single trade, or almost every single trade, or you rue the day that you decide to lose the trade, because obviously you're going to lose 50% of the account. Certain brokers don't even allow you to risk 50% of an account, right? But I digress. Now, the question is, what about the third variable? Meaning holding a trade or as long as you can, right? For as long as you can. So let's just say trader A held that trade for not 2% gain, but 5% gain. They now made, so they risked 10%, 1%, sorry, which was $10, and they made 5% gain, which is 5 times what they risk, which is $50. You see that by holding the trade for longer, in profit, you get more, right? So I'll give you an example on the chart here. You can actually see, right? Let's assume that you took this trade here, right? For whatever reason, you took this trade here and you were selling it, and you risked 1% up here. And as you can see, it has gone 50 pips in your favor. This is a 1 to 5 risk reward ratio. In other words, you risk 1% up here, you'll be rewarded with 5% down here. The reason why I want you to take a look at this is because these are the types of trades you want. You want trades that are going 5 times your risk in terms of a reward, 10 times your risk in terms of a reward, because these are the trades that actually make money for you, right? So let me give you a beautiful example. What this trade can do, if you had a $1,000 account and you decided to risk 1% of the account, which would be $10, this trade would make $50 for you. If you had a $10,000 account and you decided to risk 1% of the account, which would be $100, you up here, right, with a 10 pip stop loss, this trade would make $500 for you, right? If you had a 100K account and you decided to risk 1% of the account, right? This trade would make $5,000 for you, right? So it depends greatly on not just trying to find a strategy. Many people feel like that's what this thing is about. Yes, I agree. Understanding your strategy and finding an edge in the market is very important. But you must understand how the money works, how it is injected and withdrawn from the market, right? Because if you don't understand this, well, guess what? You literally know better than just taking a trade just because, right? And the problem with that is when you're taking trades just because, there's a lot of things that you leave up in the air, like how much you stand to make, how much you stand to lose. So I want you to pay very close attention to what a trader's salary really is. There's no right or wrong answer to that. So if a trader comes and tells you that they make every month they make $50,000, it's probably a lie, because there's no way to know that they could exactly make $50,000 every single month. Some months you're gonna make 50,000, some months you're gonna make 5,000, some months you're gonna make 0,000. You understand? The whole idea is not about trying to find something that this one size fits all, but it's trying to be able to decipher what it is you're seeing and how you can use that in your own trading. One other thing I want to make sure that you get really clear: 1% risk or less. Get that in your head, right? If you have $1,000, you should not be taking any trades bigger than a $10 risk, right? Anything bigger than a $10 risk per trade, you're asking for trouble, right? That's just the way I look at it. I would say go even less than that, right? Especially as a beginner, please take my stupid advice, right? I don't know, clearly I don't know nothing, you understand? But take my advice. 1% risk or less, 0.5%, 0.25%, 0.2%. I just want to make sure that you understand that nothing more than 1% risk should be taken on your account at any time. At any time. Right? Not 1.5%, not 2%. It is always 1% or less. Right? That's how you do it. I hope that this made some sense to you. See you in the next one.